Welcome back to Roxham TV. I'm your host, Jeremy. We've got a really interesting show lined up today because we are going to be talking about two themes that seem completely different on the surface, but they are actually well connected. So the first one is confidence, and the second is hype. Right now, markets are celebrating after reports that the United States and Iran have reached a framework agreement that could finally bring an end to nearly 4 months of conflict. Stocks are rallying, oil prices are falling, investors are jumping back into risk on assets. But the question we are going to ask today themselves, because while a framework agreement has been announced, the deal hasn't been officially signed yet. And if there is one thing we've learned over the last few months, is that headlines can often change very quickly. We'll break down what the actual agreement really means, why oil is crashing, and what investors should really be watching over the next few days. Then we shift gears to one of the biggest financial stories of the year. SpaceX is now officially a public company. The stock exploded higher after its IPO and, for a brief moment, pushed Elon Musk's net worth about $1 trillion, making him the first trillionaire in history. But instead of just talking about the stock price, I want to do something a little bit different. We are going to take a deep dive into what actually made SpaceX successful, because whether you love Elon Musk or hate him, SpaceX completely changed the entire history. We'll look at the lessons behind the company, why usable rockets matter so much, and why investors need to separate a great company from a great investment. After that, we'll move into the AI world. Researchers are claiming they have already found a way to bypass Anthropic's newest AI safety system just hours after its release. This wasn't a traditional jailbreak. It wasn't a prompt injection. Instead, the researchers say the problem may come from the way AI agents think through long tasks on their own. It is a fascinating story because it raises a big question. As AI becomes more autonomous, can we actually keep it under control? We'll also talk about why OpenAI, Anthropic, Google, and a growing list of AI companies are racing to London. Everyone talks about Silicon Valley, everyone talks about China, but London is quietly becoming one of the biggest AI battlegrounds in the world. We'll explore why talent might be the most valuable resources in the AI race. And for the Bitcoin crowd, we've got a few interesting stories as well. Michael Saylor is celebrating after SpaceX joined Tesla as another major Elon Musk company holding Bitcoin on its balance sheet. Michael Saylor said now 25% of his so-called Mag 8 companies own Bitcoin. We'll talk about what that means for corporate adoption and whether Bitcoin is continuing its move into the mainstream. We'll also look at Kraken. The exchange just became an official partner of the FIFA World Cup, putting crypto in front of billions of viewers around the world. But at the same time, Kraken's own IPO remains on hold. And so we'll discuss why the company is delaying its public listing while building new products like tokenized stocks. And speaking of the World Cup, we'll finish with one of the strangest stories in sports and crypto. So the World Cup has already sold more than 6 million tickets, yet around 180,000 tickets are still sitting on resale market. We'll talk about how NFTs, dynamic pricing, resale fees, and aggressive monetization might have created a backlash among fans. Because sometimes just because technology allows you to monetize something doesn't mean people are going to like it. So we've got a lot in today's show. So we've got geopolitics, we've got AI, Bitcoin, and we've also got World Cup and a lot to unpack. So let's get started with this first story of today that is moving the market right now. The US and Iran have actually come to a peace deal. Markets are celebrating, but the question is this actually a done deal? So let's take a look at how the market is doing. So markets around the world, not just the US, are rallying after reports that the US and Iran have agreed to a peace deal aimed at ending nearly 4 months of conflict. Asian stocks surged overnight, so take a look at the Nikkei. So being the Japan index, it jumped more than 3%. So is the South Korea, so Kospi gained more than 5%. And some of the biggest AI and technology names in Asia posted huge gains. So for example, SoftBank, we take a look at this, it saw more than 12%. Chip giants like Samsung, SK Hynix, Tokyo Electron all moved sharply higher as investors rush back into risk-on assets. At the same time, oil prices, if we take a look at the price right now, so here is the crude oil. We often look at the Brent crude oil as well. Oil prices are crashing down, dropped more than 4% as traders began pricing in the possibility that energy supplies could return to normal. So markets are so excited. Like the main reason is quite simple. Like for months, investors have been worried that the conflict could disrupt oil shipments through the Strait of Hormuz. Now, according to the statements from both President Trump and Pakistan, which has been acting as a mediator, the two sides have reached a framework agreement. The official signing ceremony is expected to take place on 19th of June in Switzerland. If the agreement holds, the Strait of Hormuz would reopen freely, military operations would end, and the naval blockade would be lifted. Naturally, markets like that outcome. And the strongest reaction, it wasn't even stock. I know I led with the stock market because these numbers are very exciting. But the strongest reaction is actually oil market. So crude prices fell more than 4% overnight as traders started removing some of the war premium that had built up over the last few months. And that's important because higher oil prices were one of the main reasons inflation started moving higher again. If oil continues falling, that would ease inflation pressures globally. It could also reduce some of the pressure on central banks, including the Federal Reserve. That's one reason investors are suddenly feeling much more optimistic right now. But there's also a bigger problem, if you ask me. So the deal hasn't actually been signed yet. And I think that's the most important thing viewers need to remember. Markets are trading as if peace is already guaranteed, but we're not there yet. The signing ceremony isn't expected until 19th of June. The details are still very limited, and implementation will matter just as much as the announcement itself. Remember, it's one thing to agree to a framework, it's another thing to successfully execute it. So let's not forget something else too, like throughout this conflict, we have Donald Trump here. So Donald Trump has talked about peace deals, ceasefire, negotiations, any breakthroughs, and potential agreements dozens of times. Depending on how you count them, you probably heard some version of a coming deal 40 different times over the past few months before an actual framework agreement was finally reached. That's why I think investors should actually stay level headed here. This is definitely positive news, of course, but positive headlines and a signed agreement are not the same thing. So, over the next few days, investors will be focused on three things. First, does the signing ceremony actually happen? Second, does the Strait of Hormuz reopen smoothly? And third, do both sides follow through on the commitments after the agreement is signed? If the answer is yes, market would continue to rally, oil could continue to move lower, and some of the inflation concerns we've been talking about recently could start easing. But until that ink is on the paper, I think it's a little too early to declare victory because if what we have learned anything about this conflict is that the situation can change very quickly. So for now, optimism is understandable, but excitement should probably come with a healthy dose of caution. So speaking of excitement, of course, a few days ago we have the SpaceX IPO. Everyone is so excited. SpaceX officially began trading today, and the market reaction was exactly what many expected. So shares opened well above IPO price, pushing the company's valuation close to $2 trillion. For a brief moment, SpaceX crossed the $2 trillion mark, making Elon Musk the first person in history with a net worth above $1 trillion. That is a remarkable milestone, of course. But while investors are celebrating, I actually think it's worth taking a step back and asking a bigger question. What made SpaceX so successful in the first place? Because regardless of where the stock trades tomorrow, SpaceX has already changed an entire history, an entire industry. So, in this segment, I want to do a deep dive into SpaceX as a company. So, for decades, the space industry worked a certain way, which is to build very expensive rockets, spend years designing them, launch them once, and throw them away, and basically repeats the same process over and over again. SpaceX managed to challenge the entire model. So instead of trying to design the perfect rocket from day one, the company focused on building, testing, failing, and improving as quickly as possible. Many people remember those early rocket explosions, myself included, but every explosion was part of the learning process. Rather than spending years debating problems in conference rooms, SpaceX preferred to test in the real world and improve through iteration. And that approach allowed the company to move much faster than traditional aerospace firms. So, one of the biggest lessons from SpaceX is actually speed matters. So between 2013 and 2015, Falcon 9 nearly doubled its payload capacity in just 2 years. Traditional aerospace companies often spend years making small improvements. SpaceX was making improvements almost continuously. Today, Falcon 9 is one of the most reliable rockets ever built, and many of its boosters have flown more than 20 times. So think about that. A rocket that used to be disposable is now being reused again and again like a commercial airplane. That completely changes the economics. Another major difference was the vertical integration for SpaceX. So more aerospace companies rely on huge networks of suppliers and subcontractors. SpaceX decided to bring much of that work in-house. The company manufactures the majority of its critical components itself. So you could ask, like, why does that matter, Jamie? Well, that's because when engineers want to improve something, they don't need to spend months coordinating with suppliers. They can make changes quickly and test them immediately. That dramatically speeds up innovation, and in technology, speed is often one of the biggest competitive advantages. So another biggest breakthrough have been the rocket reusability. Like for years, many people believe reusable rockets simply were not practical. SpaceX proved otherwise. Like Falcon 9, as I mentioned, launches previously like flowing boosters. That means like the company doesn't need to build a brand new rocket every single time. The result is lower cost. Lower cost means more actually manage to attract more customers. More customers would create more launches. More launches improve the reuse rates. And that creates an incredible, powerful flywheel. And is one main reason SpaceX became the dominant launch provider in the world. So there's also something else that often get overlooked. So most aerospace companies are focused on winning contracts, while SpaceX is focused on reaching Mars. Whether you believe that's realistic or not, it gives employees a sort of like a mission that is much bigger than quarterly earnings. That mission has helped the company attract some of the biggest engineers in the world, and it helps explain why employees are willing to take on challenges that many other companies wouldn't even attempt. So I know that was a lot of compliments for SpaceX as the company, but as you know, I always have to provide both sides of the story just for the viewers of Roxham TV can stay level-headed. So here's what investors need to be very careful when it comes to SpaceX. Like every time I just describe explains why SpaceX became one of the most important companies of our generation, it does not automatically explain why it's worth nearly $2 trillion today. Those are very different conversations. So according to company filings, so if we scroll down to the financial, SpaceX generated roughly $18.7 billion in revenue last year, but it also lost nearly $5 billion. Starlink is generating significant revenue. The launch business remains highly capital intensive, and future projects like Starship and orbital AI computing are still years away from proving themselves commercially. A huge part of today's valuation depends on what investors believe SpaceX can become in the future, not necessarily what it is today. And that's why I keep coming back to the AI comparison. So technology, we know is real, the innovation is real, the opportunity is real, but sometimes investors get so excited about the future that they stop asking what price they are paying today. Like we have seen it before, like during the dot-com bubble, the internet changed the world, but many internet stocks still crashed because expectations became too extreme. The technology was real. It was at the right time as well. The timing and valuation were not. For me, SpaceX is one of the greatest companies ever built. Like it transformed the economics of space launch. It created an entirely new commercial space industry, and it inspired thousands of new companies around the world. But as an investor mindset for SpaceX, like we need to separate those two ideas: a great company and a great investment. Sometimes they are not the same thing. Like maybe sometimes they are, but like maybe in SpaceX, I don't know. I'm being cautious. And with SpaceX now trading nearly $2 trillion, that's the question every investor needs to question for themselves as well. So let me know if you agree with my analysis in the chat. But anyways, we are taking a short break from here. When we come back, of course, we are staying in the AI world. So we have to talk about right now, a lot of companies are building the AI data center, AI base in London, because we thought the basically competitive land is usually China and also US. But right now, data suggests maybe not so much. So do stay with us after the break. We're going to give you details.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back to Roxum TV, and thanks for sticking around with us after the break. So this entire segment, I do want to spend some time to talk about AI. So one of the biggest questions in AI right now is quite simple. Can AI companies actually keep their models safe? This week, a team of researchers from several universities across China, Australia, Singapore, and the United States claims the answer might be, well, not as well as we thought. The researchers say they successfully bypassed the safety protections of Anthropic's newest Fable 5 model just hours after it was released. And according to the team, the attack took less than 5 seconds. So this is what's interesting is that Anthropic wasn't relying on traditional safety filters alone. So Fable 5 introduced a new security system built around what the company call a safety classifier. So the idea here, it is quite simple. Before the AI answers a question, another system first checks whether the request involves sensitive topics like cybersecurity, biology, chemistry, or other potentially dangerous subjects. If the request looks risky, the model either reviews the answer or switches to a more restricted mode. Many users had already tested older jailbreak techniques against the system, and most of them reportedly failed. So initially, many people thought the new defenses were working. However, not researchers found a different problem though. According to the research team, they weren't attacking the AI from the outside. They weren't using role play prompts, they weren't using prompt injection, and they weren't trying to trick the model with clever wording. Instead, they focus on something much deeper, the way AI agents complete long and multi step tasks. The researchers argue that the real risk isn't always the user's original request. The risk can emerge later as the AI works through a task on its own. In other words, the model might begin with a completely normal objective, but after planning, problem solving, and making multiple decisions along the way, it might eventually reach conclusions that create unsafe output. So the researchers describe this phenomenon as internal safety collapse or ISC. So think of it like this. So most AI safety systems are designed to guard the front door. They check what the user types, but they don't always monitor every decision that AI makes after it begins working. As AI agents become more autonomous, they increasingly plan their own actions. They will use tools, they write code, analyze files, and make decisions without constant user input. According to the researchers, that's where new risks can appear. The AI isn't necessarily being tricked, it's simply trying to complete a task, and sometimes the path it chooses might cross safety boundaries. So the researchers say this isn't just an anthropic problem. Like they tested similar techniques across dozens of major AI models and agent systems. According to the findings, many of them showed similar weaknesses. That matters because the entire AI industry is moving toward more autonomous agents. Companies want AI that can do more than just answer questions. They want AI that can search, code, like travel or manage projects or basically push that button and make decisions. The more responsibility AI gets, the more important these safety questions become. Now, to be clear, this doesn't automatically mean that AI safety has failed, and it doesn't mean the system is suddenly dangerous to everyday users, but it does highlight a challenge that many AI companies are now facing. So, most current safety systems focus heavily on user inputs. The next generation of safety systems might need to focus just as much on what happens inside the AI decision making process because future AI agents won't simply answer questions. They will take actions. And once AI starts scaling on its own and acting on its own, monitoring the journey might become just as important as monitoring the destination. So, for investors or developers or policymakers, this story as a reminder of something important. The AI race isn't only about building smarter models, it's also about building safer models. Every company wants more powerful AI. Every company on earth wants more capable AI agents. But as these systems become more autonomous, safety becomes harder, not easier. And the research suggests that some of the industry's biggest safety assumptions might need to basically rethink. Because stopping bad prompts is one challenge. Making sure an AI stays safe while thinking through a complex task might be a much bigger one. All right, so that's for Anthropic, but I do, keeping in the AI world because we know AI is a massive technology that we cannot ignore. So another AI news that I need to bring to you guys is basically the location of these AI models or these AI centers being built. So we know when people think about AI race, they usually think about Silicon Valley or maybe China, or maybe some would think about NVIDIA. But here's another city quietly becoming one of the biggest AI hubs in the world. And surprisingly, that's London. And right now, some of the biggest AI companies on the planet are expanding there as fast as they can. So what happened is that over the past year, several major US tech and AI companies have announced large expansions in London. So, for example, OpenAI is expanding, Anthropic is expanding, Google is moving teams into brand new office complex, AI coding startup Cursor is opening a London headquarters, and companies like Databricks, Salesforce, Palantir are also growing their presence in the city. So the obvious question is, why London? Like, I'm surprised as well. So according to industry executives, the answer is quite simple. There are a lot of talents in London. London has quietly built one of the deepest AI talent pools outside of the United States. The city is home to world-class universities. It has decades of experience in technology, finance, and research. And perhaps most importantly, it was the original home of DeepMind. Remember, DeepMind was founded in London before Google acquired it. Many of the engineers, researchers, and AI experts who helped build today's AI industry either came through DeepMind or worked alongside people who did. That has created an entire ecosystem of AI talent, and now everyone wants access to it. So what's happening now looks a lot like, if you ask me for London, a lot like a talent gold rush. These companies aren't just competing for customers, they are competing for engineers, for researchers, for product builders, for AI scientists. And many of these American companies have enormous budgets. That means they can offer higher salaries, larger stock packages, and access to some of the most advanced AI projects in the world. For smaller startups, that creates a challenge because when OpenAI or Anthropic comes calling, it's not easy to compete. We know that. And there's another reason companies like London being the money. London remains one of the world's most important financial centers. That means easier access to investors, easier access to banks, to business partners, and easier access to customers around Europe, around the Middle East, and also Africa. So, for an American company looking to expand internationally, London often becomes the natural first stop and is one of the few cities that combines technology, finance, and global reach all in one place. However, ironically, London's biggest challenge might be its own success. Like the city is running out of premium office space. Demand from AI companies is growing so quickly that experts are warning of shortages over the next several years. And office space is only part of the problem. AI companies, what they need is enormous amount of electricity. So they need data centers, they need computing power, they need housing for employees, and they need transportation infrastructure. As AI grows, those demands only increase. Interestingly, building all these data AI labs around the world, this trend happens globally. So recently, Meta announced a massive AI data center project in India. Around the world, countries are competing to become AI hubs. Some are competing for talent, some are competing for infrastructure, or maybe they're competing for capital. But everyone wants a piece of the AI economy because governments increasingly view AI infrastructure the same way they view highways, ports, or even power plants as more like a strategic national asset. So the biggest takeaway for this news is that AI race is becoming global. A few years ago, most people thought AI would be dominated by Silicon Valley. Today, we have major AI hubs emerging in London, India, Singapore, the Middle East, and beyond. The winners won't just be the companies building the models, they'll also be the cities and countries that attract the talent, capital, and infrastructure needed to support them. And right now, London is making a strong case that is one of the most important AI cities in the world. So let me know your thought about this. Do you think London has a chance of succeeding in becoming the major AI city and major AI hub around the world? But anyways, we will take a short break from here. When we come back, we have to talk about Bitcoin and Michael Saylor. So Michael Saylor is right now thanking Elon Musk on X for being the Mag 8 instead of Mag 7. So that is some interesting stuff. If you want to know the details, make sure to stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. We now have to talk about Michael Saylor, what he did on X over the weekend. So Michael Saylor has a new name for Wall Street's most important company. So forget the Mag 7, Magnificent 7. Michael Saylor is calling calling them the Mag 8. And that's because there is a new member joining the club, in SpaceX. Following SpaceX blockbuster IPO, Michael Saylor congratulated Elon Musk on X and made a very interesting observation. So what he wrote here is that thanks to you, 25% of Mag 8 now holds Bitcoin on the balance sheet. At first glance, it may sound like a joke, but there's actually a bigger story behind it. So what do you mean by Mag 8, right? Like for years, people have talked about the Mag 7. So that being Apple, Microsoft, Nvidia, Amazon, Google, Meta, and Tesla. These companies have dominated stock market returns and become some of the most valuable businesses in the world. Now, Michael Saylor is adding SpaceX to that list. And after its massive IPO, it's hard to argue that SpaceX doesn't belong in the conversation. With a valuation of $2 trillion, actually more than $2 trillion, is now one of the most valuable companies on earth. So here's where things get interesting. Both SpaceX and Tesla hold Bitcoin on the balance sheet. So Tesla currently holds around 11,000 BTC, while SpaceX holds nearly 19,000 BTC. That means 2 out of Saylor's Mag 8 companies now have Bitcoin exposure at the corporate level, and that's where the 25% figure comes from. And while that might sound like a small detail, it says something much bigger about how Bitcoin is being viewed by major corporations. Because remember, there was a time when putting Bitcoin on a corporate balance sheet was considered crazy. When MicroStrategy first started buying Bitcoin, many people on Wall Street thought Michael Saylor, he has lost his mind, what he's doing. Today, the conversation is so different. MicroStrategy now holds more than 845,000 BTC. Tesla still holds their BTC, so is SpaceX, and around the world, we are seeing more public companies adopt Bitcoin treasury strategies. So from MetaPlanet in Japan to Smarterweb in the UK, corporate Bitcoin adoption is no longer a niche idea. It is becoming a trend. So what's important isn't just like these companies own Bitcoin, is who these companies are. We are talking about some of the most influential businesses in the world. So companies that are shaping AI, shaping technology, transportation, communications, and space exploration. When firms of this size decide Bitcoin deserves a place on the balance sheet, other executives start paying attention, institutional investors pay attention, governments are paying attention, so is the market, because whether people like Bitcoin or not, it's becoming harder to dismiss it as some fringe asset. So the real takeaway here, isn't whether the Mag 7 becomes Mag 8. It's that Bitcoin continues moving further into the mainstream, not through speculation, not through some memes, not through hype, but through corporate balance sheets. And every year, more companies are treating Bitcoin as a treasury asset. And if that trend continues, today's conversation might eventually shift from why does this company own Bitcoin to why not? All right, so I'm liking what I see, and let's actually shift gears and talk about, kind of related to crypto. And this season of the year is, of course, one of the most important in sports, so being FIFA World Cup. Let me know if any of the audience are watching FIFA in the live chat right now. So, anyways, we have to talk about Kraken and also FIFA. So one of the crypto biggest exchanges is making a major push into mainstream sports. So Kraken has officially become the exclusive crypto exchange sponsor of the 2026 FIFA World Cup. And considering the World Cup is expected to attract billions of viewers worldwide, this could be one of the largest marketing campaigns we've seen from a crypto company in years. But while Kraken is spending big on global visibility, there is one question many investors are still asking. So what happened to Kraken's IPO? If any of the viewers still remember about that. So for Kraken, the logic is quite simple. Like, why are they doing this World Cup? What does it have to do with a crypto exchange, right? So football is global. Crypto happens to be global as well. And both reach audience far beyond national borders. The 2026 World Cup will be played across the US, Canada, Mexico, with more than 100 matches scheduled over the next month. FIFA expects, what they expect is billions of viewers around the world to tune in. And that's exactly the type of audience Kraken wants to reach. The company said it plans to launch fan-focused experience and marketing campaigns throughout the tournament across North America and Europe. And this isn't Kraken's first move into sports. The exchange already sponsors major football clubs. So this World Cup partnership is really the next step in a much bigger sports strategy. But let's be honest, most people watching the World Cup probably don't spend the day thinking about Bitcoin. They are sports fans, and that's exactly why these sponsorships matter. Crypto companies have spent years trying to move beyond the image of being a niche industry. Sports give them access to mainstream audience. It's the same playbook we have seen from Coinbase, Crypto.com, Binance, and many others. The goal isn't necessarily getting someone to open an account tomorrow. The goal is trust and brand recognition. When people repeatedly see a company associated with major global events, it starts to feel more legitimate. And what's interesting though is while Kraken is expanding globally, its own public listing plans have stalled. According to reports, Kraken secretly filed paperwork with the SEC last year as part of preparation for a potential IPO. At one point, the company was reportedly valued at around $20 billion after raising hundreds of millions of dollars from investors. But the IPO market hasn't exactly been friendly. After the crypto market slowed down and changing investor sentiment, Kraken reportedly paused its listing plans earlier this year. The company hasn't ruled out going public, but management appears to be waiting for better market conditions before moving forward. And honestly, that might be the right decision. Because one thing we learned from the whole SpaceX IPO is that not only it is sucking liquidity from the crypto market, it is also sucking liquidity from a lot of stocks in the market right now, and especially non-AI stocks. So while if you look at the S&P or Nasdaq keeps breaking new all-time high, a lot of stocks are actually suffering, especially the non-AI sector. So because of this, it actually makes sense that Kraken put on a pause. Right now, investors are becoming much more selective about which companies deserve premium valuations. And apparently, the trend is SpaceX, and it could be in the future like OpenAI and Anthropic, because those two also have an IPO coming this year. So let's go back to Kraken. So while they're waiting for the right moment for the IPO, Kraken, what they're doing in the meanwhile is that they're pushing into tokenized stocks. The idea is quite simple. Traditionally speaking, when a company goes public, institutional investors often get access before retail investors. Regular investors usually enter after trading begins. Kraken wants to change that. Through its tokenized stock platform, the company hopes to give retail investors access to IPO opportunities at the same price available to larger institutions. The underlying shares would be held by regulated custodians, while investors receive blockchain-based tokens back one for one by those shares. In theory, this could make investing more accessible globally. The irony here is quite interesting, though. Like the Kraken's own IPO might be delayed, but the company is actively building tools that could make future IPOs more accessible for everyone else. So whether it's SpaceX or OpenAI and Anthropic or the next big generation of AI companies, Kraken is betting that tokenization can eventually remove many of these barriers that keep ordinary investors out of these opportunities. So while World Cup, the whole sponsorship grabs attentions today, the bigger story might be what Kraken is building behind the scenes. Because if tokenized stocks continue gaining traction, the future of capital markets might look very different from the one we have today. All right, so as I mentioned, the 2026 FIFA World Cup is finally here. Of course, everyone is so excited. I'm sure a lot of viewers are watching. By FIFA's own numbers, more than 6 million tickets have been sold. So at the first glance, demand looks very, very strong, right? But here's the surprising part. Just before the kickoff, reports show that roughly 180,000 tickets were still sitting on resale markets looking for buyers. And that has sparked a bigger conversation. Is the problem demand, or is the problem the ticketing system itself? So that is a very controversial decisions that FIFA made this year. It actually involved NFTs. Yeah, I mean, that name we haven't heard in years, but right now they're using some NFT technology. So, in order to get access to certain ticket sales, some fans first had to purchase what FIFA called a right to buy pass, or LTB for short. Think of it this way, like you weren't buying the ticket, you were buying the right to potentially buy the ticket later. And these rights were issued through FIFA's the whole digital collectible platforms. In other words, they are selling NFTs. The system was originally built on Algorand before moving to FIFA's own blockchain infrastructure. Now, to be fair, FIFA never promised that these NFTs were actual tickets. They simply gave holders access to future ticket purchasing windows. But many fans were not happy because they had to spend money before even knowing exactly what seat they would get, what the final price would be, or whether the purchase would ultimately be worth it. The second issue, it is pricing. This World Cup is heavily centered around the US, or around the United States, and the US sports market is very different from many parts of the world. American sports leagues have been extremely good at optimizing revenue through premium seating, dynamic pricing, and secondary market sales. FIFA appears to have adopted a similar strategy. So instead of fixed ticket prices, many tickets were sold using dynamic pricing. So that means prices could change depending on demand. As interest increased, prices moved higher. Some group stage tickets that were originally marketed as affordable ending up costing several times more than many fans expected. For international supporters already paying for, think about it, you pay for flights, you pay for hotels, food, transportation. The rising costs became another major expense. And I think the problem is actually it might be too much optimization. For years, sports organizations have become incredibly sophisticated at maximizing revenue. Every seat, every sponsorship, every merchandise sale or fan interaction, like everything gets monetized, basically get optimized. But eventually, you reach a point when fans would start to ask, am I watching a sporting event or am I participating in a financial engineering project? When people have to buy NFTs to access tickets, when prices constantly move higher, when fees keep getting added, that experience starts feeling less like a fan-friendly show. And that's where frustration begins, and I understand. The controversy doesn't just stop there. Like Viva also launched its own official resale platform. So on paper, that's actually a good thing. Like it helps reduce scams and gives fans a safer place to buy and sell tickets. But many supporters were surprised by the fees. Reports suggest sellers can lose around 10% in fees. Meanwhile, buyers might face another 17% in additional charges and service costs. That means a single resale transaction can carry close to 27% in combined fees. So even if someone sells a ticket at the same price they paid, they could still lose money after all the costs are deducted. So does this mean the World Cup is falling? Well, that's not what I'm saying, but let's be clear about that. So the World Cup remains one of the biggest sporting events on earth. The final will almost certainly sell out. The biggest matches will still be packed. Host nation games will still draw huge crowds, and millions of people around the world are still incredibly excited. This isn't a demand problem, it's a pricing and user experience problem. So I think the lesson here goes beyond football. It applies to crypto, it applies to AI, it applies to every industry. Just because technology allows you to monetize something doesn't mean consumers will always like it. Like NFTs, it might be useful. Like dynamic pricing can increase revenue for the company. Resale marketplaces can improve liquidity. But eventually, there is a limit. Fans still want transparency. They still want fairness, and they still want a simple experience, because at the end of the day, people are paying to watch football, not to navigate a complicated financial product. And the World Cup ticket controversy might be a reminder that even the world's biggest events can't push that balance too far. So let me know, like after knowing this NFT dynamics, do you like it? Are you still paying to watch the FIFA, or like watching on TV should be okay? I don't know, like I'm not a guy, so yeah, let me know your basically your thoughts in the live chat. But anyways, that's pretty much all I want to talk about in today's show. So before you go, make sure to give us a follow on X. So my X is champion_crypto_io. Make sure to follow Roxham TV as well. So the reason why you should follow us, because we have regular news coming out on an hourly basis about Bitcoin, about AI, about geopolitics. So, and then we also have many prominent guests joining us to share their market tech. So point being, you would not regret following us on X and also subscribed on YouTube. As always, my live here is Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded versions are also available on both channels. So, being Jam Crypto YouTube channel and also Roxham TV YouTube channel. Thank you guys for watching. I wish you